We do have a new IPO in town. That's Advanced Enzymes. So it's in a very niche space, and we have the management who joins us, Chandrakant Rathi, the promoter and managing director, and Piyush Rathi, the CMO of Advanced Enzyme Technologies, joins us now. This IPO hits the market today. Gentlemen, good morning to both of you.
Good morning. Yeah, good morning, everybody.
Mr. Rathi, Mr. Chandrakant Rathi, let me start with you. Tell us what the business has been doing so far, and what are the growth rates that you see for the business going ahead?
Well, if you carefully study, although 5 years past growth rates are there, which are there already with you, but if you look at our entire track record, the company has always had a very healthy growth rate, 20-25% in the top line and 30-35% in the bottom line, for our entire history of 27 years. And we have been profit making and dividend paying company since 99. So very, management is totally very entrenched. And we dedicated approach to this sunrise industry of enzyme, which has huge potential for growth. It's a sunrise industry, very niche industry, very few players globally. Like if you look at even we are amongst top 15 players in the globe. We are largest Indian company, but we are again amongst top 15 players already. And with a very large battery of enzymes, more than 60 enzymes developed indigenously by us. And our focus being human nutrition, human health care, or nutrition for per se, and which again trickles down to animal nutrition, followed by food industry, where we have very good presence globally. So this together gives an excellent opportunity, a very exciting way for going forward.
Okay. Piyush, let me get you into this. You supply to nutraceuticals, pharmaceuticals industry.
That's right.
Would you at any point in time think of putting your own brands in the market?
We already do have our brands in the market. In the US, we have about 5% of our portfolio, which is basically our own brands in the US market.
There, the margins tend to be much higher?
There, the value capture from the consumer side tends to be higher.
So, Mr. Chandrakant, would that be a way forward? Will you be putting more nutraceuticals? I mean, obviously a brand out there is a bigger margin winner. Will that be a strategy?
No, not exactly, but we use that also as a way to help our B2B business, because a lot of people don't know what enzymes can do, and our brands gives them an indication, because enzymes can do almost anything and everything, because the whole nature works with enzyme only. When you look at all the miracles in nature happen through enzyme only. I mean, so using enzyme into any aspect of life is eco-friendly, safe, without any side effects. So that being the case, we see huge opportunity, untapped opportunity for growth. And so our R&D keeps on developing solutions rather than we do use enzyme as a toolkit, but we do develop solutions for various challenges faced by the human life.
So your margins are, it's a very high margin business. I mean, if you look at FY16 itself, you're trading at almost 47% margins. Piyush, is there scope for more upside in margins?
Well, we do believe that these margins are sustainable.
Okay, what could the triggers be for a higher margin business? Because, you do have R&D spends as well, and the fear is that currently it's about, 5-7% of total sales, your R&D spends.
Correct.
The fear is that if it goes higher, then maybe that could impact your margins in the near term. Is that a concern?
So our margins actually come through our integration, because we do our own R&D, we do our own manufacturing, we do our own marketing for our own brands. So the entire integration, we are present across the value chain. And that basically translates into the margins, high margins for us.
Okay.
We do not have any CRAMS model. We do not do any contract research or contract manufacturing. And we cater to very high value addition industries. So that's
how much is your global business? How much is domestic?
About 65% is global as international business. About 35% is India.
Okay. And the break will continue to be that way, 65-35?
It is likely to continue.
And margins are the same in both?
Margins are better in the international markets.
Okay. Well, Mr. Rathi, I just had this, we have your table which you have filed in your DRHP over the last 3 years. Why is there a blip in FY15? Revenues are down 7%, EBITDA is down 12%. What went wrong?
In our entire history, we did a voluntary recall of the product because the way the contaminations are measured, the new technology, as you know, like today our mobile phone is much more powerful than what you call old days computers, even the big computers. So the new methodology in which you can test the contaminants are very sophisticated. You can even now check contamination to the level of 1 part per billion level. And although the previous methods were not so sensitive, so as they were discovered, we found out that there were some small ppb level contaminations. So our company believes in very strongly in following the law as well as being totally ethical. So we decided to recall voluntarily the product from all the international markets.
Okay.
And it really gave us a huge learning, and the company came out very, very strong later, which you can see from our last year's growth was 32% in top line, and profit growth was almost 57%.
Yes.
Which is rare, which happened only because of the strength of the company.
That's exactly what is reiterating Sonia's question. Is that sustainable? I mean, a 50%, or was that more because of the base of FY15?
I cannot exactly, because growth future is not very predictable. But if you look at our entire history, we have always grown very well. Our profit growth has been between 30 to 35%, or top line always has been grown between 20 to 25%. So we think it's sustainable.
So will you be looking to enter any more markets globally? I understand that your key markets are North America and some markets in Europe, but would you be looking to expand anywhere else, or to supply anywhere
of course,
else?
like with a young person like Piyush and whole team, we intend to enter a lot more markets. As at the same time, we're also going to deepen our geographical presence today.
Which are the markets that you're looking
Like
at?
US is the largest opportunity we see, because we already have a huge presence there. We have 40 people working in US, and US itself is a world's globally, like it's a $2 billion market. So we see huge opportunity in USA. At the same time, we'll expand into the Europe and Japan and other Latin America.
So you have 6 manufacturing facilities now. Would you at any point look to increase the number of facilities?
Well, our current facilities are already, the way we have structured our new plant in Indore in SEZ, because we realize that we need to be much more international focused. So it's a plant in the special economic zone especially for export. And that plant was constructed with, we can easily double the capacity of that plant. Today also we are operating at barely 40-45% capacity. So we can double that capacity even with a very small investment in a span of 1 year. That together gives us a very comfortable, capacity to go forward up to 1,000 crore without any challenges.
Okay. Of the around 400 crore, 410 crore that you will raise, almost 360 crore is divestment. How much are you taking, and how much is Kotak getting?
You mean like a mean
promoter,
person?
I mean promoter.
Yeah. Promoter family had to, because we already had pre-IPO, we had 80.5% equity, so we had no choice but to give our shares for offer.
So now you will become what?
66%. 66%.
Okay.
Piyush, in terms of clients, I understand that one of your exclusive supply partners is Sanofi. Any other major clients to whom you guys will supply exclusively?
There are several clients, and we work across the globe. It's not just in India, but in Europe and US as well. And we have had a long history with our clients. Many clients are with us for more than 20 years, 25 years. So there are several marquee names in our clientele, basically.
Okay. What expansions have you planned, Mr. Rathi?
Well, already this is like, as you know, these all the 3 portals: human nutrition, the feed enzymes, and bioprocessing. Like, the entire, the growth rates are extremely good. Like,
No, why I'm asking is, you're growing at 30% your revenues, as you pointed out. If you have to grow 30% for the next 3 years, then do you already have the capacity, or have you to put in capex? And if you have to put in capex, will you have to raise capital?
Honestly, already I answered, we don't need any money now for capex purpose. At the same time, growing, we definitely foresee that we'll continue with this space in future.
Can you tell us the growth rates? How much is the global enzyme market now, approximately, and how much will it grow over the next 3 years?
Internationally, the enzyme market is about $6 billion, growing at about 7%, healthy 7%. So $420 million worth of enzyme market is growing every year. Our company is barely at $45 million last year. So even for us growing 30% or whatever 20% is $9 to $10 million additional revenue is a very small pie in the large global market. And there is no Indian company or no other peer in the process. So it makes it a very, very, possible to continue with that kind of growth rates.
Okay.